Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I want to talk about Johnson JNJ stock, which reported earnings earlier this week. Johnson JNJ, ticker symbol JNJ. Make sure you stick to the end of the video for my opinion on this stock. So Johnson JNJ is currently priced at $149 per share. Past year, up 13%. Past 5 years, up 49.29%. So capital appreciation isn't as much as S&P 500, but overall dividend yield is pretty solid. Market cap is $393 billion. P ratio is 26, and dividend yield is 2.59%. So in terms of the earnings, you can see the actual EPS was $1.67, which beat the expected earnings per share of $1.48, which is very good news. So overall, Johnson JNJ engages in the research and development, manufacturing, and sale of products in the healthcare field. And their segments include consumer, pharmaceutical, and medical devices. We'll get more into the details of how those segments performed. So taking a look at the earnings call, you see this happened on July 16th. So they have a lot of partnerships, collaborations, and licensing arrangements in these specific specialties. So in terms of their sales, you can see US was $9.5 billion, international 8.8, and worldwide is 18.3. So relative to last year, you can see it dipped slightly. You can see relative to Q2 2019, side-by-side comparison. You can see overall down 10.8% reported. In terms of financial highlights, you can see dollars and billions. It's the sales. Let's see, what's the blue versus the green bar? So sales, this is Q2 versus 2019. So Q2 2020 slightly down versus last year over year, down 10.8%. GAAP earnings, you can see it's down 35.3%. GAAP earnings per share down 34.6%. Adjusted EPS down 35%. And adjusted earnings down 36%. So overall, across the board, their sales revenue and earnings was down relative to last year, year-over-year performance. Now for consumer health highlights, this is in their healthcare consumer product space. Over-the-counter and oral care strength offset by the impact of the current climate. And you can see reported worldwide down 7%. And operationally down 3.6%. So this segment down by that percentage. Pharmaceutical slightly up. You can see growth across most therapeutic areas despite the impacts of the negative news. So this is up 2.1% and up 3.9% in terms of reported and operational respectively. Now for medical devices, this segment took the biggest hit, and it was driven by the negative impact of the negative news, down 33.9% and 32.7% respectively. This is the worst performing segment out of the three. You can see medical devices down 37%, pharmaceuticals up 2.1%, and consumer health down 7%. So medical devices was hit the most, which makes sense because a lot of patients don't necessarily go in person to hospitals as much, and they try to stay at home. So a lot of these elective surgeries and in-person visits are declining. So for consolidated statements of earnings, let's see, sales to customers. So overall, you can see it's not as good as last year, Q2 2019. Now for adjusted income before tax by segment, you can see percentage to sales, pharmaceutical 44.1%, medical devices 1.2%, consumer health 24%. So medical devices, as you can see again, in the story, it's down significantly relative to last year. And overall total down slightly as well. Pharmaceutical did a little better, but same for consumer health. They both did a little better, but medical devices offset a lot of the gains. You can see this chart, 2020 versus 2019, big dip from 8.6 billion to 5.3 billion. And they're also competing in the vaccine research and development and manufacturing of this. You can see their strategy is capital allocation. That's their highest priority, and also organic growth business needs as well as free cash flow. Low priority is dividends, share purchases, and investment in M&A, which makes sense because that is just mainly pleasing the shareholders versus growth in the business as well as capital allocation. That's longer term, more sustainable. Now, for the macroeconomic perspective, in the healthcare industry, you can see trends for many procedures approaching back to normal levels, so it's trending in better direction. Now, for office visit, as mentioned, in-person visits, it's improving compared to earlier stages of the pandemic. For patients, you can see public educational materials and resources to increase patient confidence and prioritize their health. And consumers, U.S. category growth trends improve from height of lockdowns. So overall, it's slightly getting better. The impact of is very fluid and likely to continue evolving. Now, in terms of their guidance, their future performance, you can see there's some assumptions, but in the pharmaceutical space, you can see expectations remain unchanged. Recent improvements in numbers of patient interactions with healthcare providers and continued above market growth. Consumer health, you can see remains unchanged. Expect impact to certain categories as a result of reduced store traffic, government lockdowns, and distancing behaviors. So overall, these two remain unchanged, but we'll see what happens with the third category of medical devices. Taking a look at the key stats. So, as mentioned, earnings, you can see revenue and earnings year over year. It's been pretty steady. Johnson JNJ is a pretty stable consumer healthcare company, and you can see that Q2 dipped slightly relative to last year. In terms of analyst ratings, it's a solid buy rating at a 1.9. That's from, this is from 17 analysts. Current price at $149, which is below the average price target of $164. Now, in terms of the key stats, let's take a look at that. The trailing PE, which is relative to past 12 months, is 26. Forward PE is 16, so slightly better. Scrolling down a bit, you can see 52-week change, 16%, which is performing better than the S&P 500 market overall. The 200-day moving average, it's so current price, I think it's like $149, so it's trading slightly above the moving average. Let me confirm just to check. Yeah, 149 is the current price, so it's trading above the 200-day moving average. Share stats, you can see held by institutions about 70%. Dividend yield is 2.59% currently, but forward annual dividend yield is 2.71. So it's good to see that slight increase in dividend yield. Payout ratio is 59%. You can see that it's good to see that around the 50% mark, so it's sustainable. Profitability, it's a very profitable company. Profit margin is 18% and operating margin is 25%. Revenue is $80 billion. Quarterly revenue growth is negative 10%, which we talked about earlier. It's slightly declining because of recent negative news. Gross profit, $54 billion. Earnings before interest, tax, depreciation, and amortization is $27 billion. Net income, $15 billion. quarterly earnings growth is negative 35%. So overall, it's trending downwards relative to recent quarters and year over year. Total cash is 18 billion, so good to see that large cash holding to sustain their business during these times. Total debt is 27 billion. Debt to equity is 45. So for every dollar equity they have $45 in debt. And book value per share is 23. So overall, I think Johnson Johnson is facing some short-term challenges, especially with their medical device segment. But their consumer health and pharmaceutical segment remains relatively stable during these times. And I think as surgeries and in-person visits increase, then the demand for medical devices will also increase. And it's good to see that dividend yield increasing as well. So I think overall, Johnson Johnson's a pretty solid dividend stock to hold in the long term. I do have a position in Johnson Johnson. Currently, it's 3% of my portfolio at $8,659. Currently up 15% on this position, and I plan to continue holding this position, possibly even adding more to this position. So great long-term dividend hold. That's all for this video. What are your thoughts on Johnson Johnson? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.